Welcome to MarketSnap's daily market rundown. IBM just had its worst day in 39 years, a 25% collapse that's making headlines everywhere. But here's the thing, while everyone was panicking over Big Blue, the rest of the market was quietly putting together a very different story. Let's break down what really happened today. It was a day of two completely different narratives. On one hand, you had a geopolitical firestorm in the Middle East and an earnings bomb from a legacy tech giant. On the other, cooling inflation data gave the market a reason to breathe. The result? A session where the major indexes managed to grind higher, but the real action was under the hood. The S&P 500 eked out a 0.38% gain to close at 7,543, while the Nasdaq outperformed with a 0.9% jump to 26,107. The Dow was essentially flat, up just 9 points at 52,508, and that's a testament to the IBM drag. The Russell 2000 added 0.39%, and the VIX dropped nearly 4% to 16.50, suggesting the fear trade is easing, at least for now. The Nasdaq's strength was powered by a broad tech rebound, but it wasn't a straight line. Chip stocks were the clear leaders, with the semiconductor index eyeing new highs after what some technicians are calling a completed Elliott wave correction. That's a bullish signal for the AI trade, but as we'll see, not all tech is created equal. Speaking of leadership, the large-cap gainers list reads like a who's who of AI infrastructure and cybersecurity. CrowdStrike surged 12%, Palo Alto Networks jumped nearly 7%, and Dell added 7%. Goldman Sachs was the Dow's hero, soaring 9% after a blowout quarter. Micron, SanDisk, and Monolithic Power all rallied on the AI memory supercycle thesis. And then there was the other side. IBM cratered 25% after warning that AI spending is cannibalizing its legacy business. Customers are prioritizing memory chips and AI hardware over traditional IT services. That sent shockwaves through software stocks. ARM Holdings fell 6%. ServiceNow dropped nearly 6%, and Adobe lost over 4%. Citigroup also slid 5% despite a solid earnings beat as investors focused on rising costs. The market movers tell the story of rotation. Nvidia gained 4%, Intel added 4.5%, and Bank of America rose nearly 2%. But Oracle fell 2.7%, Wells Fargo dropped 2.5%, and SpaceX slipped 2.2%. The message is clear. Money is flowing out of old software and into hardware, cybersecurity, and financials. On the volume front, Nvidia was the most active stock, followed by Intel and New Holdings. SoFi was also heavily traded, up 2.3%, while American Airlines fell nearly 4%. Lucid was a disaster, plunging 16% on bankruptcy rumors that the company later denied. We're in the thick of earnings season, and today's bank results were the headline. JP Morgan, Goldman Sachs, and Bank of America all reported strong quarters, with Jamie Dimon calling conditions nearly as good as it gets. Citigroup also beat, but its stock sold off. The big takeaway? Wall Street is feasting on trading and M&A fees, and the AI supercycle is fueling a deal-making boom. You can find exclusive earnings transcript summaries on MarketSnap. The macro picture was dominated by two forces, inflation and geopolitics. June CPI came in at 3.5%, down from 4.2% and below expectations, marking the biggest monthly drop since 2020. That was a huge relief for the market, and it effectively took a July rate hike off the table. But here's the catch. The drop was driven by falling gas prices during a brief U.S.-Iran truce. That truce is now over. Oil surged back above $80 a barrel as the U.S. resumed strikes and reinstated a naval blockade of the Strait of Hormuz. Trump also proposed a 20% toll on ships transiting the waterway, which the shipping industry warns could backfire spectacularly. Fed Chair Kevin Warsh testified before Congress today, and his message was clear: no tolerance for persistent inflation. He's setting up 5 new task forces to rethink monetary policy, and the market is now pricing in a potential rate hike by year-end. That's a big shift from just a few months ago. Meanwhile, New York became the first state to ban new hyperscaler AI data centers, a move that could have major implications for the energy and tech sectors. Looking at the weekly winners, Vodafone is up 18% on a potential deal, Cerebras Systems gained 16%, and Lumentum jumped 11.5%. Energy stocks like Marathon Petroleum and Valero are riding the oil rally, up 9% each. The message is clear. Energy and AI infrastructure are the places to be right now. On the flip side, AppLovin lost 15%, Moderna dropped 13%, and Axon Enterprise fell 13%. Rocket Lab and Bloom Energy also took hits. The weakness is concentrated in high multiple growth names in biotech, which are sensitive to the rising rate environment. Sector-wise, energy is the clear leader, up 2.3% on the week. Consumer defensive and real estate are flat. Everything else is mixed, but the story is the rotation out of technology and into energy and financials. Healthcare is the worst performer, down 2.2% on the week, followed by basic materials at 0.5% and industrials at 0.6%. Technology is actually up 0.8% on the week, but today's action suggests that's fragile. A few other things to watch. The AI token maxing debate is heating up. Chamath Palihapitiya warned that companies have no idea how much they're spending on AI inference, and that could hit earnings. Meanwhile, the Mag 7 trade is quietly falling apart as capital broadens beyond big tech, and China's exports surged on AI chip demand while its domestic economy continues to struggle. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in. If you want to stay ahead of the curve, make sure to subscribe for our daily recaps and exclusive SWOT analyses. The market is changing fast, and we'll help you navigate it. See you tomorrow.